Hello everybody, welcome to the Trader Merlin Show. It is your Monday edition. Very happy Monday to everybody out there. Hope you had a great weekend, enjoyed some of that sunshine, unless you're on the East Coast, and then it was just hopefully find some warmth in your home. Today's going to be a great show. As always, I feed off of your comments, questions, and suggestions. So for those of you who might be new, I see we've got some, I think Jeff might be new from New Jersey. Welcome, Jeff, and Dave, Pepper. Chelsea, good to see you as well, joining us today through the midst of your studies. Kevin, Terry as well, Thomasina, Marshall. For those of you who are new, you can do me a favor, just click that subscribe button down at the bottom right-hand corner on the video. What I'm doing every day is I'm doing these videos for about 30 minutes to an hour, depends on how long you guys coerce me into going on with this show, but generally on some topic that you guys have suggested. Now today, it was interesting because I had a question from Dan in New Jersey, your brethren, Jeff, out there in New Jersey, asking me about time frames. And I thought, you know what? One of the questions I get all the time, kind of drives me crazy actually, is what's the best time frame to look at? So I figured we would address that question on today's show. So that will be coming up after I go through our opening markets and do some little housekeeping pieces of information, go over some of the earnings announcements that have happened or have not have happened yet, as I'm waiting for Tilray to report earnings, but they have not come out yet. So let's get things started. We'll start off with our market update. Hopefully getting into all of this market stuff. Before I dive into the charts themselves, I wanted to show you what was going on with regards to earnings. This is what happened today. Nothing really exciting except the foregone conclusion that Marriott was going to have an abysmal earnings announcement. There you go. They were down 69% from their expected earnings. They were supposed to report 26 cents per share. They came out at negative 58. Yeah, that's kind of a little bit of a miss there. Actually, I'm sorry, let me rephrase that. You missed by 58 cents. They were supposed to come out with 26, came out. Is it Monday? You can tell it's Monday because I'm just a mess. I don't even know the right date on my screen. It's Monday. I'm going to start all over again. Let's go right back to that chart there. Okay, Marriott International was supposed to report 84 cents a share, came out at 26. So they're still making money, but they've lost a lot. They were down, dropped 58 cents, surprise on that one. So that was no big deal. We expected that to happen. Other than that, that's pretty much the only one there that really matters. Energy Transfer Partners comes out here hopefully soon. It hasn't quite come out yet. All right. I'm not drinking today, Chris. No, it's a Monday. I don't drink on Mondays unless I'm persuaded to. On the show, I'll just drink on Fridays. All right, let's go from there to your charts. Now, technically, wasn't really anything that fantastic out there with regards to our markets, but I'm going to share that with you what happened. At least I'll run through them quickly. Here is your top 7. I don't know why my... it's got to be gremlins in my system. There's usually a little percentage piece. There you go. So we'll go to our percentage change. All right, this is totally messing with me today. I don't know what is going on. What on earth is happening to me? Go to the dot daily. Let's start off with our worst performer, which, as I've been watching, and for those of you who may have brought up the chart of the week, which I released on Saturday morning at 10 a.m., I did a thing on Bitcoin, which is a little bit different. A little bit different for most of it because it was really about an event, not necessarily a chart. Hopefully you guys saw that one. If you didn't get a chance, go to tradermerlin.com. You'll see there's a little category underneath the videos that says chart of the week. So every Saturday I'm trying to release those at about 10 a.m. And I did one on the halving of Bitcoin. And of course, Bitcoin went through their halving just a couple hours ago. I thought it was supposed to be at 5 p.m. and actually turned out to be right around 1 o'clock, I believe. So Bitcoin halved. It successfully halved. What does it mean? It doesn't mean there's half the amount of shares. All it means is that the miner's reward is cut in half for now, for the next 210,000 blocks until we get to another 4 years from now. So in 2024, we will probably have another halving of Bitcoin when that reward for miners goes from 6 1/4 to 3 1/8. Here's your chart of Bitcoin on the day. It was the ugly one by a long shot, a pretty significant drop out there for Bitcoin, 8,845. Not sure where all my numbers went. I usually have all my percentages here. Yeah, there they are right there. So somehow, in logging off my computer and logging back in, gremlins have taken over, as I'm sure you guys have experienced that in your trading career sometimes, and completely morphed my computer. So that was your worst performer, Bitcoin. Russell 2000 dropped 1.13%, and I'm basing these numbers off of right now as of this second. So many of you are probably looking at numbers that closed when the market closed about an hour ago, or about an hour ago. So this is going to be a different number. They are trending down right now. I'll bring up the 5-minute just so you can see what happened. In the after hours, you're seeing a bit of a drift down on the indexes, and that's across the board. So it's not any one of these in particular. It's just all of the indexes. So Russell 2000 down 1.13% right now. Coming in, I'll call it fifth place, is crude oil. Down a little bit. This is your 5-minute, down 0.97. The daily picture, it's holding its own. You've got, let me get some of these orders off the screen. You can see I've been trading crude oil quite a bit until they stopped me from trading crude oil. Gotta love that. Crude oil on the day down 0.97%. I don't think there's anything really that noteworthy here with crude oil. It's really just kind of going sideways right now, and we have had 4 or 5 days of sideways action after that really strong run up from that $10 mark on crude oil. Let's see how long it builds this base and goes sideways. The longer it does, the more likely it's going to hold. Although, per the conversation we had with John Rowland on Friday's show, I just have this real gut feeling that we're going to see this start to sell off yet again in about another week and a half, especially when we get to the closing of that contract. Remember, this contract expires it's 3 days before the 25th of each month, because crude oil is a monthly deliverable contract. So right around the 20th, we will see this contract expire, and therefore you might actually see those crazy moves like we saw in the previous contract, the CLK on the CLM. So I'm very cautious of this one. If you're trading crude oil, be very careful because it's going to be a wild mover. All right, keep on moving up. We've got gold here was down 0.8%, so pretty much everything down except the NASDAQ. Not anything technically great, just kind of within that descending triangle we identified last week. S&P 500 down 0.32%. No, I did not buy any or short any futures. I did add to my put option position here on the ES. Again, for those of you who have been following along, I am looking at the August 185. So far out of the money, it's crazy. It's way out of there. It's a the long shot trade, but I've got a sizable position on the August 185s, and I added a lot more to that today as we came into a beautiful double top formation on today's markets. I don't know if anybody caught that. Check out this 5-minute. We had a beautiful double top formation. Hallelujah, hallelujah. That's one of those intraday patterns that I like to look for. As it came up to that second high, that's when I started just adding to my short position or my put position on the ES, which I will hold for a few months. I think we'll probably run up a little bit more before we really start to see that breakdown. Remember, it's the economic data will start to get worse and worse and worse because of the impacts of this coronavirus. And this quarantine, this shutdown, whether you guys think it's legitimate or a total hoax, is irrelevant. Bottom line is it's seriously damaging our economy, and we're shrugging it off like no big deal. So I think that'll come home to roost here in another month or two. So being a little preemptive and getting that short position on. All right, final, we get the 10-year. Obviously, the 10-year, you can see the price of the 10-year on the 5-minute chart. We'll bring it back to a daily for you. Just traversing sideways, not noteworthy. I'll probably stop talking about this one until it does something exciting. Here's the most exciting one. Breaking through. Looks like it's going to be ripping to all-time highs here soon. You can thank Apple and some of the FANG stocks for this one. NASDAQ 100 looking great, up 0.68% to the north side. So all in all, a pretty good day out there for the NASDAQ. The other indexes suffering just a wee little bit, showing a little bit of downside move out there. And hopefully that, in my opinion, hopefully that will continue to move up. Okay, as always, this is a listener-based show or a viewer-based show. So for those of you listening to the podcast, I'd encourage you to join or send in your questions at tradermerlin.com anytime you want. For those of you who are live right now, feel free to type in your questions. I'm watching them as they go through. Is everything I'm showing is blurry? Gino says everything I'm showing was blurry. All those charts are blurry? Okay. Hopefully it'll look better. Let me know. Okay, I thought it might have been my issue. If you guys hear a really weird sound in the background, my German Shepherd is over here having a total nightmare, and he's just like, so it's not me. I'm not making weird grunting noises. That'd be my 115-pound German Shepherd. Okay, not that you need to know about my pets or anything. Let's get to the markets. Here's what spurred the topic of discussion today. This is a question that came in last night from Dan at my Trader Merlin account. So again, you can send in those questions and say, hey, I got a question on this or that or the other thing. Let me know, and I will go into it. Dan says, what time frame do you like using on your charts for day trading? 1-minute charts seem too fast and 5 minutes seem too slow for me. What do you prefer and why? All right, now this is going to be a little bit, I'm not going to say long-winded, but it is going to be multiple topics in one. I decided to just go into something I've heard so often, which is what are the best time frames to trade? So Dan, unfortunately, you're going to have to listen through all of this to get to the end about what I prefer for short-term day trading. But it really boils down to what fits your objective. We all have different goals in this. Some of you are working 9-to-5 jobs. Some of you are retired and are out on the golf course right now. We're going to watch this video when you get home and don't really care about the market so much every day. Then you get people like me who are just entrenched in it, and I love watching these markets move every single day. I'm happy to make a trade. If it lasts 5 minutes, great, cool. As long as that trade gave me a higher probability of success, I'll take those trades all day long. It takes different people for different types of trading styles. The challenge that we face, especially for those of you who are new and starting out, and I'm sure many of you right now could probably comment to this, is finding out what is your style. Your personality will reflect right in your trading style. So if you are an aggressive, fast-paced person, you're probably going to gravitate towards day trading. It just fits your makeup, your DNA. If you're more chill and relaxed and laid back, you're probably going to be more of a swing trader to a position trader. So I wanted to start off with a little bit of a matrix to help you understand the context of those three styles and what are the basic attributes to each one, because from there we can step back and look at the time frames needed to optimize those specific trading styles, if that makes sense. So let's dive into the best trading time frames out there. Sorry, I'm trying to read through the chat here as I was worried there were some problems with you guys. Okay, I made this one up just a little bit ago, so I apologize if there's any typos. I actually am back working on some content for Online Trading Academy, so pretty happy about that. So I don't have all the mornings to do prep work like I was, so this might be hastily put together. It really boils down to what type of trader are you, okay? Are you a day trader, meaning you are in and out by the end of the day, and who cares what happens after market hours because you're not in, you're out. There are those who are swing traders, which is really someone who is in a trade for a couple of days. You're willing to take things overnight because you've done the analysis, and that might be from a swing low to a swing high or swing high to a swing low. Really, you're looking for ebbs and flows in prices, and you're trying to capitalize on those in a couple of days or maybe even a couple of weeks, but you're not looking at anything that's going to be going monthly. That steps in the toes of position trading, which would really be much longer term trading. And I know some of you know all this and are relatively bored at this point. Don't worry, I'll get to some meat and potatoes here soon. The first criteria that we have to think about, which ties right into what the discussion for today is time frame. What charts are going to work best? But first we have to look about, Brendan says I'm an everything trader. Aren't we all an everything trader? When the time permits. But see, the important thing there, Brendan, is you understand the risks, reward, and characteristics for each of those styles, because now you can start to compartmentalize trades based off of style. When you mix them all together, this amalgamation of three styles at once, it will screw you up. You don't want to be having that where all of a sudden everything's jumbled in one, because there's different rules for different trading styles. So the time frame here, obviously for the day trader, is going to be a very short period of time. I'm talking minutes, right? When I was day trading back in the late 90s, when I told you guys my average trade was about, average number of trades per day was about 550 trades a day, I was in trades that could last, 60 seconds, maybe less. That's really it. Second component here for swing traders, they're looking at time frames that can be a little medium term, right? They have to stay in a few days, maybe a couple weeks. Ultimately, everybody that's an investor is in the long-term category, where you're saying, I'm in it for months to possibly years. Okay, so that's the first component breakdown. The second one's going to be size. This is the quantity, and we've had a lot of discussions, actually really good discussions in here, not just from myself, but from the viewers as well, about the single best way to control your risk, and that is share size. As a risk management tool, there's nothing better than saying, all right, instead of trading 100 shares, I'll go back to 5 shares, or 10 shares, or 30, whatever is comfortable to you to control that risk. With trading in each of these three styles, it's no different. The change here is, for somebody to be an effective day trader, they're going to have to trade larger size, meaning really large share size. My average share size back in the late 90s was at least 1,000 shares at a time. For some of you might get just nervous just hearing that. I was trading upwards of 10,000 shares on average. It was no big deal, but minimum was 1,000. Why? Because I was trading small little price moves. I was trying to capture a nickel or a dime. So if I caught a dime on 1,000 shares, I made $100. I can't effectively run that business if I'm trying to make a dime with 100 shares. I made $10. That was eaten up with commissions. So short-term day trading, you're generally trading with much bigger share size, which is a dangerous thing, and I'll show you why in a second. Swing trading, I put medium here. That I know that's vague, but you kind of find that happy medium account that will fit your personal trading profile. And for those of you who are Online Trading Academy graduates, you should know about money management, etc. Final one is position trading, right? A position trader might just be trading 100 shares or a few shares of a symbol. I mean, it's funny. I have friends right now that are trading 2 shares of different stocks. They're younger millennials, but they're trading very small share size because that's all they can afford. And they also know they're going to be in it for a long time and they can ride out the major fluctuations. The key here is, for me with the size, is especially for the day traders, you can't afford to ride out $1 or $2 loser on a trade because you have 1,000 shares. They just kill you like that. So you have to be very, very tight and disciplined with those stop losses. All right, the last category, running through these rather quickly so I can get to some charts and talk about my analysis and how I like to look at charts, would be obviously the stop loss. So we look at entry, stop loss, and price targets. Well, stop loss is critical because that's saying how much you're willing to lose. So for the day trader, we know it has to be small, like really small. Like sometimes my stops were like 2 cents. I was buying into momentum, and if that momentum stopped at all, I'm just out. Get out and take a 2-cent loss because I can't afford to have anything bigger than that. For the swing traders, it's just medium across the board, right? Your stop loss should always be proportional to the ATR, right? There needs to be some calculation there. I won't go into the math behind that, but at least you need to know how much your security is moving on that specific time frame, which we've established here before. So I say medium there. You're probably not trading 1,000 shares. You might be trading a couple hundred or a few hundred. Now you have to figure out, according to your stop loss, how much you're willing to risk on that security. That'll tell you the number of shares. So the final piece here is, for the position traders, you're using much larger stops, right? I'm not looking into the minutia on a 5-minute time frame for position trading. I might be looking at my trades based off of a daily chart or weekly. I know some are doing monthly as well. So this is the challenge. Now, what I want you to do is focus on those 3 headers at the top. You have time, size, and stop loss. All right, y'all glued to that one because this right here is going to be a little bit different. This is the one for me that really sums it all up. It's the 4th category, which is stress. So some of you who are short-term day traders, you understand the stress level is very high. It can be extremely high because you're so hinging on every single move and tick and fluctuation of price. It will drive you crazy. I've found that I'm much better stress-wise not being a very large day trader, meaning when I short-term trade, I can get fairly big, but I'm not doing it all day long, right? I'll day trade for a little bit, but a lot of my stuff is really right now anchored around swing. I'm not a position trader. I can't see staying in things that long. So I'd put myself in those shorter 2 categories. Now, we get to the discussion of which time frame is best. The answer is there is no real solution. There are strengths and weaknesses to all time frames. It's kind of like saying, no offense to the ladies out there, some men go, oh, well, brunettes are far superior to blondes. Well, that's a matter of personal preference, and it's a matter of what you choose to use to make that analysis. I know, a horrible analogy. I'm the master of those. I'm sure all the blondes listening right now are like, that is offensive. Here comes the hate mail. All right. When looking at this, I asked the question, or the question was, what's the best time frame? And I get that all the time. There is not one. You should always look at multiple time frames. Never trade. I don't care what style of trader you are. You should never trade by looking at one time frame. It makes you one-dimensional. And while you may see something on let's say a 5-minute chart that looks amazing to go long, the daily, the 4-hour, the weekly, the monthly could all be screaming at you to go short. And you are bucking the trend on that minor time frame. You're going to get overrun. I saw a comment come through here earlier. I think it was from Pepper. Aren't supply and demand zones weaker on smaller time frames and stronger on the higher time frames? Yes, that is generally true. That's not always true, but generally, yeah, you're going to have more strength on the longer term time frames. This is why when you look at something as simple as a moving average, the longer you make that moving average, the more info, the more data is being collected, and the stronger it will become, right? A 200 period moving average from an institutional perspective is like the line in the sand because it's the mother of direction. Quite often we get down below a 200 period moving average, that market has rolled over and going the opposite direction of whichever way it was headed. So yes, they do become much more valid, which is why even as a short-term day trader, my favorite chart, the one that I look at as a day trader, is a daily chart. Wait a minute, who cares? You're looking at a shorter time frame, aren't you? You're out by the end of the day because I have to know that overall trend. So let me show you a visual here. I want you to think of building a pyramid. Medic man, don't email set. Thank you. I want you to think about a pyramid, right? And the base is the one that has the most substance to it. It's probably the heaviest weighted. Well, if we look at this picture here, when we talk about time frames, the larger time frame should carry the most weight for you, meaning that's where a bulk of your analysis and decisions should be made, is on that larger time frame. So if we use myself as an example, all right, my larger time frame is the daily time frame. That's the big picture for you. Where has it come from, and where is it likely to go based off of those stronger trends? Right, a 5-minute charts trend is nowhere near as significant or powerful as a daily charts uptrend, right? So I want to start and put most of the emphasis on that bigger time frame. From there, we start to whittle it down. Of course, I had the pyramid the wrong way, but it's all right. You have the medium time frame. For me, the medium time frame that I look at will be, it's actually multiple. I don't look at 3, I look at 5 time frames. So for the day trading I do, I like to start at the daily. That's my big one. My intermediate, I will say, is going to be a 4-hour, so a 240-minute chart, or an hourly. And I have these all set up on 3 monitors at home. So when I click a button, they're all set up. I can just real quickly glance and just, in one swoop, get a perspective of all of this. Now, I have 4 time frames generally viewed, and that's going to be, I like to look at the 4 hours sometimes, but that's not the primary. Daily is the top. 60 minutes would be my intermediate. Now, here's where I start to get a little bit more focused on the short-term stuff, the small time frame. You notice that it should be a very small portion of my decision, right? That's that smaller time frame. For me, the smallest that I will go is a 5-minute chart. I like the 15 and 5. So when you look at my screens at home and go from left to right, there's 8 charts at all times on my computer. On the far left monitor, I have the daily, the 60-minute, and then on the right-hand side, I have the 15 and the 5, and that's on the bottom. And on the top, I have the exact same charts, but of the markets. So I have it all set up with links. So when I click on, let's say, the NQ, the whole top row would change to NASDAQ futures. If I click on the ES, the whole top changes to the S&P futures. Down below that, I have any individual security I want to look at, so I can see the correlation, how they line up. To me, that's almost as important as what time frame you're choosing is, how does it line up with the dog that wags the tail? In this case, the market, the S&P. So, do you take trades without multiple time frame alignment? Yes. You know, and that's a great question. Alpha Intelligence asked, do you take trades without multiple time frame alignment? Sure, I will take trades sometimes off gut feeling, but you know, you have to remember I've been doing this a long time, so not that my gut feeling is any better, but I feel like I have a lot of experience under my belt, and I trust my gut sometimes. So yeah, even when they're not in alignment, I will, but in everything that we're doing with regards to trading and investing, it's about probability. If I'm going into a trade that's out of alignment and doesn't match up in those time frames, is that good for me or bad for me with regards to probability? It's bad for me, right? I want to go where things are lining up and the odds are in my favor. That makes it as simple as possible. We all know that even the most perfectly planned out, most perfectly aligned trade can fail. But the odds are pretty good that it won't. And that's what I'm gambling on. I hate to use the word gambling, but that's essentially what you're doing. You're taking a high probability stake at it based off that information. So yes, I am looking for that correlation. Brendan says 5 minutes is great, 15 for intraday context. Yeah, I definitely like those time frames. They're the two that I use the most because that's where my eyes are focused. Now, to answer the question, excuse me, that came in from Dan early on, and it was, what time frame do you like using on your charts for day trading? 1 minute charts seem too fast, and 5 minutes seem to slow me down. Without question, it's a 5 minute time frame. I don't go anything below that. Now, I will show you all time frames right now say short, not the daily. The daily and weekly are actually saying stay in and go long. I hate to say it. They are coming into some supply levels, but they're still saying this market's got some legs underneath it. Until that changes, you know, I'm still bearish, but the bigger time frames are saying it's to the upside. Why don't I go below a 5? It has to do with stress and noise. We all know that stress is a killer. One day, actually, I don't even know if I think I may have said it on the show one time, but I'm never going to say it again because it's in the book, and at some point I hope to finish my book, is how I had vitiligo. I don't know if you guys can see it, but you can see my fingertips. I got little white things on my fingertips. I also have it around my eye. I got vitiligo, and it is a direct result of trading. And I just got way too stressed out. There was a moment where literally my whole system shut down in fear because of a trade that I was in, and I got vitiligo from it. So what I wanted to do personally was to say, look, That was one minor ailment. I could have had something much worse happen to me. So I took a step back and said, what's stressing me out the most? And it was constantly focusing on every little tick that chart made. There are these things called tick charts. And let's see if I can bring one up for you here. Let's bring up the ESM 20. Since it's trading right now, oh, down to 22. All right, we like that. Drop it like it's hot. All right, let's bring up that one. Here is your five minute. And you can see while we do have some nice swings, there's not, it's not that crazy. I'll show you a tick chart here. And you have to understand that right now these markets are closed. So let me go time frame. And this is what a tick chart looks like. It's barely doing anything right now because we are late into the market. Nothing's really moving right now. It's no big deal. If you look at this during regular market hours, this thing is moving so fast, it's crazy. And your eyes start, they call them a tick chart because after a certain amount of time, your eyes will develop a tick. I would get twitches in my eyeballs because it was just moving too quickly. And I wish that this was trending right now, but as you guys know, the futures markets is closed right now, so just for a little bit. But here's your tick chart, and all a tick chart does is every time there's a transaction, it plots a point, and then it moves to the next transaction. So these are just wild swings, and it's not even that big of a swing. It's just the tick chart makes it look that way, and it'll literally drive you crazy. Take a peek at it. If I zoom out a little bit, it only gives me a certain amount of data, but I would not recommend a tick. Now, to Dan's point, what about the 1 minute time frame? Again, there's a lot of noise going on in a 1 minute time frame. I found a couple of things out because of a mentor. My mentor told me this. He says, I want you to go back and I want you to review your trades. I said, okay, great. So I went back and reviewed my trades that I was making at the time. And he says, how often are you being stopped out? And I had a lot of, I was getting stopped out all the time, and I was getting really frustrated. Of course, I'd have some great runners where things started to move in my favor, and I made some good money. But it was the stop losses all the time that really frustrated me. So he says, look, I want you to do me a favor. Instead of trading on a 1 minute time frame, at that point it was tick. He said, I want you to move back and go to a 5 minute time frame. I'm like, but 5 minutes is an eternity as a day trader. Things are much slower. I won't be able to see those moves that I was used to. What it did is it smoothed things out. I wasn't getting jigged out all the time. For those that don't know what jigged out, just a trading term where market's trending up and all of a sudden it does just a small little blip down and one candle takes you out and then just keeps on going right where you thought it was going to go. That's called getting jigged out. Getting jigged out happened all the time on a tick chart or a 1 minute time frame. And by taking a step back, I didn't become as frenetic and active out there. I just kind of relaxed a little bit. Now, for some of you, a 5 minute chart is still insane. Great. Go to a 15, go to an hourly, or maybe even a daily, depending on what your style is. So, Dan, that was my answer to your question. I wouldn't use a 1 minute chart just because the stress involved in the movements. You'll get jigged out and stopped out a lot more. 5 minutes is kind of my sweet spot. And what I found out result-wise is I was having more consistency. I've had bigger winners, and I wasn't getting stopped out as much when I went from a shorter time frame like tick or 1 minute to a 5 minute chart. So that was my answer to that one. So the question is, what's the best time frame to trade? If I had to choose one, if I had to just gun to my head say, hey, pick a time frame that's the best one, for me, I would say the daily time frame. Just because it shows me what's been happening on a daily time frame trend, and you can start to see patterns there. But as we know, you can't look at things from one time frame. It's kind of like if I was to turn around and close and show you the back of my head and say, what's my eye color? You'd never know because you couldn't see my eyes. So switch that stock around, switch that futures contract or that currency around and look at it from different perspectives. Because what I'll see happen quite frequently is, I guess we could do an example. Someone's asked for an example, so I'll show you over here on Apple. So if we take a step out and look at the nice sell-off in the after hours on Apple. Tank, baby, tank. Let's start with the weekly. So obviously you guys can see here on this weekly time frame of Apple. What's the weekly time frame telling you? You guys get to interact with me on this one. Weekly time frame saying what? Go long or go short? I mean, it obviously going back into 2017. I'll zoom out a little bit further. It looks to me like this chart is telling you to go long, isn't it? It's still moving to the upside. It's got a nice trend going. Things look good from a long perspective, right? I'm waiting for some feedback here. I got it on low latency. It should be faster than this. All right, so I'll go. Keep a paper bag next to the computer to keep from hyperventilating. Good. And this is what's perfect about trading is we get different results here. So, and I have a feeling I know why Kevin and Joseph and Brendan all said to go short. Just look at the trends. The trends right now are saying to go long. On the daily, it says go long. Or sorry, on the weekly, it says go long. On the daily, it also says go long. But what you guys can't ignore is we're coming into these all-time highs in here, right? You're coming into this all-time high again on Apple, which I would say for me, you're looking at somewhere as a zone, I would say 324 to its peak that happened, what day was that? On the 19th of January. So that's the area I'd be looking at as a potential short. So if we're looking to go long here because the weekly and the daily have told us to go long, great. But how much meat is on that bone? Right? If I think it's going to turn around at 325, that only gives me $10 of room to play with. Now, that may not seem like a little amount, but for Apple, $10 is a drop in the bucket. So what this helps me do is look at it from a swing trading perspective. I don't think that I would want to be going long right now simply because of what we're seeing on this chart. And yes, I can tell the Online Trading Academy grads in here because you guys are saying it's high on the curve. We're coming into supply. Exactly. Right, not much meat on this bone left. So this is why if I just started with an hourly, if I started there, this trend looks great. Boom. I'm going long. I'm buying any pullback, right? But you would be incomplete without starting on the higher time frame. That's the most important piece because you could go long on this and maybe catch a few bucks out of it, but there's probably going to be an issue right around 325 on Apple. And certainly that gets even worse when you look at things like a 5-minute time frame, right? You're ignoring the big picture. And as some of you have already pointed out, there's a lot less strength on these shorter time frame trends and supply and demand zones. So that's the importance of this. So, I hate always sounding so ambiguous, but I think that in trading, there's so many that's not definitive, so much that's not definitive. It's subjective. It's an art, right? You could look at two different pictures or paintings and say, oh, this one's so much better than that one. Well, someone might disagree with you. With trading, I think it's a little bit easier because we can analyze the higher time frames. And if you're a long-term investor, start with the monthly. I know a guy, he used to look at the yearly. I don't even know if I can pull up an annual chart on TradeStation. It might have an annual button. Let's go see if I can pull it up here. Yeah, monthly is as far back as they go. But, here's your monthly on Apple. All right? I mean, that's telling you, goes long and strong. That's a good one, Dave. Vegetarians are so confused right now. We're psychics with the chart you just showed us. Yes, I wish you guys were psychics. It would make for a totally different trading room, wouldn't it? It'd be great if we could have some psychics out there. But the point I'm trying to make, and I think you all understand this because I know many of you are active traders every single day, is there is no perfect chart. There is no perfect time frame. For me, it's the daily. I love looking at the daily. I don't know why. It's just there's so much more that I can tell. First off, what it shows me that I think is critical are the gaps. I'm a big fan of gaps. Now, of course, if you're trading futures, gaps aren't that relative. And same thing with Forex. But if you're an equities trader, there's this great tendency for things to fill gaps. So I want that daily to show me. If I use a weekly time frame, what happens to those gaps? I only see one of every 5 that may have happened, right? Because those candles all get smushed into one. So for me, starting off with the daily is number one. I like looking at the 4-hour, but really it's about the hourly and the 5 if I had to pick 3 charts. I also like the 15 in there as well. Those help me out. All right. What questions? I know you guys had a ton of questions. Earlier. I want to make sure I get to some of those. Let's see. I'm looking for question marks. Where are they? I got the alignment one. What is the minimum win-loss percentage that you need to day trade in order to become profitable or swing trade? There's not a minimum win-loss ratio. I mean, this is where I have a problem, giving people a pat on the back for a very poor win-loss ratio. What I mean by that is this. You could have somebody who loses 4 trades in a row. They lost 4 in a row, and they had one big winning trade and erased all those losses. So while they're profitable, they're failing 80% of the time. That's bad. What's really good about that is if you're making money and you're wrong 80% of the time, well, what happens if I can fix one of those losing trades and make that positive? And now I'm wrong 60% of the time. All of a sudden, my P&L will start to really jump. I've known traders who were right 80% of the time, but made very little money because they would let some of those bigger losses get away, or that one loss get away from him. So Joseph, it's hard to say what's the minimum win-loss percentage that you need to day trade. You could have a horrible rate, like I said. You could have one correct trade out of 10, and still make money. To me, though, that would not make you a good trader. You're profitable, but there's no consistency there. It sounds like you're throwing haymakers out there, and you got lucky 1 out of 10 trades. I would much rather see somebody who's right, 3 out of 4 on their direction, and then works to refine their stop losses, their money management, and trade management to stay in that trade a little bit longer. And therefore, those 4 out of 5, or I don't remember what number I said, 4 out of 5 winners will all of a sudden gain them much more profits, and then all of a sudden they're doing really well. So that would make it a better trader, as someone who has more winning percentage. But I've seen guys who have 80% win percentage lose money as well. And you're thinking, well, how does that happen? Poor risk management, right? Let's say I've got 5 trading days, Monday through Friday. On Monday, I make $1,000. Tuesday, Wednesday, Thursday, I make $1,000. I'm up $4,000. And on Friday, I lose 10. I was right 80% of the time, and I'm now negative $6,000 on the week. Just bad money management, bad risk management. So that's why you hear me emphasize all the time the importance of a daily stop loss limit or stop losses on every trade, because if you don't have that stop loss, one losing trade could erase everything that you've done, and that's one of the most frustrating things possible in trading and investing. All right, you guys have the questions. Type them in here at the bottom. I'm going to go to the read from the bottom here and see if we got anyone. 51.49. That's not where I'm going. You trying to tell me how long to make the show today? It's not going to be that long today. All depends on your risk-reward ratio. Time frame is irrelevant. Yep, I agree. All right, so that was my thing on the best trading time frame. There isn't one. Somebody can make the argument that theirs is the best. That's not true. It's the best for them, and we all have to find out what's best for us. You guys have any last-minute questions? Feel free to type those on in here while I wait for you guys to type in questions pertaining to today's topic or something else. Type them in. I'm going to go through and look at your economic and earnings calendar for tomorrow. Actually, let me really quickly. I was waiting for Tilray to report earnings. They were supposed to report after hours. Let's see if they have. Here's Tilray. We'll go 5 minute. Obviously, the $8 stock. Brendan, remember when you were looking at this thing at 150? Didn't it hit 300? It's just crazy, this stock. Let's go show you the after hours trading. Yeah, they must have reported right as about an hour ago. They dropped pretty quick from 820 down to about 730. So not looking so good out there. All right, what questions do I have? Does it matter when the zone is created? Let me go back to the house here. Does it matter when zone is created for day trade, overnight, pit session, etc.? 5 minute regular market hour chart is different than after hours. Yes. After hours trading is a little bit different, and it's one of the things I love about what I do for this show and for Power Trading Radio is I get a chance to interview people like a Craig Weil comes to mind. I know some guys who actually put a lot of emphasis in helping in using the after hours trading points as turning points during regular market hours. So let's say, for example, you guys come in tomorrow morning to trade and you notice that the S&P hit an after hour high of 29.50 and then sold off aggressively. Some traders will look at that and say that's a supply zone for the regular market. Even though it didn't happen in a regular market, it may hit. When talking to someone like Craig Weil, he goes, those are irrelevant to me because there's no institutions playing at that time. They're all off doing something else. They're there during regular market hours. So for him, much more emphasis being placed on the regular market only. I think that you can put emphasis on those supply and demand zones that form in the after hours session, especially when there's an aggressive turn. The thing you have to remember is this pre-market and post-market trading, liquidity is very, very low. So when I have a 50,000 share block of shares or contracts or whatever coming in, during regular market, it might not move the market at all. During the after hours, it could have a huge move because there's a liquidity issue. There's nobody there to buy them or sell those things. So I feel that the turning points are more relevant during regular market hours, but I still pay attention to the aftermarket stuff, if that was a good enough answer there for you. Do closing prices matter more than intraday? Not for me particularly. What I used to do every day. So as a day trader, here's what I did. Let me go out here and I will go to. I haven't watched this bad girl in a time, but this used to be $168 now. I can't remember trading Clack at $40. I should hold my gums and I don't. I remember trading Clack when it was $40. Getting old. So, for example, if let's just do it as of yesterday's trading, because I haven't looked at Clack in a while, and we'll see if this did anything relevant. So you notice that and let's turn off after hour trading. This was my routine for the stocks I traded almost every single day when I just did nothing but short-term intraday day trading. So I would mark off four numbers. Actually 5. I'd do yesterday's close. So that's right there. Let me draw it in snap mode. I do yesterday's close, yesterday's open, yesterday's high, which would be right there, yesterday's low, and the close of today. So you see I've got these 5 lines on this chart here. Now, I don't know whether any of those are going to hit, but those all are something that's relevant. Those all became part of an algorithm. Those are all things that somebody programmed in. For all indicators, moving average, stochastics, Bollinger Band, you name them all. What's the most important one? Open, high, low, or close? It's always the close. So in theory, that should have the most relevance, especially for these patterns and indicators. But I would basically just come in the next day and pan forward. And if I saw it come to these levels, I would be interested in potentially going long or short based off them. I don't know if it did or not. It doesn't look like Clack hit these ones at all. So no trade made. Yeah, so there's nothing going on for that. But that's what I would do every single day on the stock that I trade. I do it every single day when I would come in, just to give myself an idea of where those lines in the sand were the previous day. Because markets have memory, and sometimes those prices might repeat. All right. Let's see, what other question? Is there a time frame for futures trading that you use? No. Joseph says, is there a time frame for futures trading that you use which has given you more winners? No. Remember, I'm using multiple. So it's not, I wouldn't say it's a time frame that gave me the winner. It's the combination of time frames, right? The unit as a whole. Think of it as a team. Each one of those time frames is like a scout giving me information, right? They're telling me different pieces of information. When I combine those, to me, that's what makes the winning trade. Not, it was the 5 minute that made the winning trade, if that makes sense. All right, let me go to your economic calendar, and I can wrap this thing up here because I got some work to do. We will go to, let's see, where was I? I was headed to the economic and earnings calendar for tomorrow, once I get past this stuff. Yeah, we do have some interesting stuff tomorrow. Here's what's happening earnings-wise. Not a lot to speak of on the earnings front. You have Duke Energy, Honda Motor Corp, Hoya Corp, no idea what they do. BMW going to report, as well as Alcon, Shiseido, maybe they make peppers, XP, and Nissan. So, again, not a lot of things here with regards to earnings announcements for the 12th. It's not an earnings day. What is interesting is going to be the economic announcements. Now, the U.S. is the dominant dog tomorrow. That is for sure. Look at all the announcements here. I'll put it in a little red box for you. That's all the U.S. Now, of course, 2 of those are FOMC meetings. You have members speaking, Harker and Quarles. Of course, there was a comment made. I can't remember the gentleman's name. FOMC member saying these markets, the worst is yet to come with regards to our economics position in our markets. I'm like, yes, thank you. Yes. On that list, you have Consumer Price Index, which is interesting because some of you have been talking about not being in an inflationary market, but actually deflationary. Check out the CPI number here, right? CPI, they're expecting to come out at negative 0.7. That would be deflationary. We'd be looking at inflation with positive numbers, and they're targeting 2%, 3%. This is going the opposite way, so we're definitely seeing some deflationary stuff here. I'm kind of curious to see what the mortgage delinquencies numbers are. I don't think that will become an issue till next month, as you have to have like a couple of months for this information to build up. Excuse me. And then we get down lower here. You do have a GDP number. I bring this one up because I know some of you think I'm overly bearish on the market. I feel like the U.S. may have been hit worse than the U.K. with regards to the coronavirus piece. Just from what I've been reading in the media, it seems like we're on full-on quarantine and all over the place, and the U.K. is in some spots and isn't. The GDP is obviously what we're producing, and I don't think our numbers are going to come out looking good. Look at the UK here. They're expected to go from negative 0.1% to negative 7.9% in a month. That's a huge change, and I think that will kind of be an eye-opener for the U.S. markets as to what our GDP numbers will be like when they come out, which I think are going to be much, much worse than the UK's. There's that, and I think we have one more announcement. There's a rate announcement tomorrow as well. It's a New Zealand dollar coming out with their rate announcement. Right now, everything expected to stay at 25 basis points, but it's really about the press conference and policy statement that comes out after those announcements. All right. Am I doing contract work for OTAs? No, I'm back on normal, back to normal. Pray these markets tank soon. I'm going Well, I don't think praying is going to help in these markets. It's just letting the markets do what they need to do. If they were to be let alone to do what they needed to do, these markets would be tanking. Of course, we know that there's a lot of manipulation going on out there to help push these markets up. We'll see what transpires here in the near future. Right now, there's just still so much optimism that all this money pouring in is going to help it out. I think that, again, you have to wait and see what's the new normal once we can all go back out there. Not sure why, but the screen has been fuzzy and off this podcast. Has it? You guys, so it's been fuzzy for you guys? It's important you let me know this because I'm using this software, and if there is issues, I noticed there was an issue where it wasn't loading the screen on Friday's show. I definitely want to make sure that we fix any blurry issues. All right. Yes, currencies are going to be big nuts. No, Medic, right now I'm just doing content development. I'm actually building out Strategic Investor on Demand, which is what I was working on before all this stuff happened. So I will be going back to build that content. Right now, that's my main focus. The interesting part has been, it hasn't come up yet. I'm sure that they might be watching this right now. I'm sure that they'll want me to stop doing this, and because it's at 2 p.m., which completely interrupts a normal workday. But I'm looking at it from the perspective of I can do all the development work, content creation, anytime I want, so I'll be doing that from home, going in every now and again. But I'll still be doing this show. To me, I'm going to try to do everything I can to keep this one going and not go back to PTR, just because I have more freedom to do what I'm doing here, and I like having that freedom. So hopefully you guys like it as well, even though I know some of you don't like my cursing and drinking on the show. But I will be doing everything in my power to stay here. Trust me, it'll be a fight if they ask me to shut this down. You like that? Well, yeah, actually, it's funny. One of the things that was really a pleasure about learning what I learned from Online Trading Academy so I took a class from Online Trading Academy in 1998, and in 2001, I was headhunted by an Italian bank. And these pictures right here, this is Piazza di Papa in Ancona, Italy. So long story short, I ended up actually becoming a university professor at a university in Italy. I created the first trading lab ever. We had a live trading room. We had, it was supposed to be 20 workstations. Well, there were 2 students per computer. It was packed. I didn't speak a lick of Italian other than pizza, pasta, and ciao. It turned out to be one of the greatest experiences ever. And I was at a outdoor market, and I found these pictures sitting there in Italy, and I'm like, I got to get them. And there's a great little restaurant right here. They had happy hour all the time, but there's a restaurant right around the corner where I used to DJ just for fun. Here I am, the university professor, and I would go out with my students and have, whiskey sours and play some music at the local bar. So that was fun. Life is short. Enjoy it while you can, right? Cool. All right, everybody. Well, that will do it for today's show. I probably went a little bit long-winded on that one. Hopefully, it helps solidify some pieces for those of you who are active traders, for those of you who are starting out. Maybe it gave you a little bit of sense of direction and what really to focus on. It's not focusing on one time frame. It's the picture of all of them together. It's kind of like saying it's putting together a puzzle, right? If you get a puzzle that has 100 pieces and you got one, you said, this is the piece that matters. They all matter. And when you put them all together, it forms the best picture of what it is that you're trying to achieve. So look at things from multiple time frames. Obviously, if you're managing your 401k, don't bother looking at a 1-minute chart. It's just going to torture you. Who cares? If you're a day trader, you better go down to the smaller time frame so you can see what's happening on that smaller time frame. All right. Hope you guys enjoyed that. Again, click that like button. Give me a little thumbs up out there. I've got about half of the likes so far. I think we usually get up in the 100 mark. So hope you guys enjoyed that one. Share this one to anybody that might be suffering or not having a good understanding of time frames, etc. Of course, tomorrow, I don't know what the show will be about tomorrow. I'm making it up as I go along. If you have a good topic you want me to cover and I have time to prep for it, send it on in at tradermerlin.com or comment down in the video down below our YouTube channel there. That'll do it for today, everybody. Thank you so much. Until tomorrow, happy trading. I'll see you tomorrow.